What's up, everybody? Michael and Coco here to do some technical analysis on the S&P 500. It's about that time where I have to call in the pro for some extra help. You can show me the way. Let's get into it. All right, welcome back. We are looking at the daily time frame of the SPX, which is the S&P 500 index. Isn't that right? Yes, it's right. Yes, it's so correct. We're going to go over this daily time frame and the 30-minute time frame, look at support, resistance, and kind of follow up on yesterday's video. So let's go ahead and just hop right in. As you can see, this long-term trend line, relatively long-term trend line, this purple line here, dating back to about June 3rd. We went over yesterday's video on the weekly time frame and made some sense of it, but we clearly broke above a nice big gap out today. Let me zoom in here on the price action. Gapped up and moved higher to close the day right here where this gap window was 33.30, which we discussed in yesterday's video. If you scroll back in the history of the chart, this is where it got hung up right here, closing that window. We've been talking about, hey, if the price breaks above this trend line, the next stop is going to be here. And then after that point, if we get a close above, we're going to test the market high at 3,400. Well, we are right here testing that window. Will we get a break above it tomorrow? Well, we're going to have to look into the 30-minute time frame to get a good sense as to where the support and resistance lie and what might take place. Now, if you're new here and you're wondering what these rectangles are on the screen, we have this red rectangle, that's the bear's camp, an area of resistance. Then we have the green one, an area of support, the bull's camp. As you can see, the bulls have been making quite an amazing run these last 4 days through the bear's camp. So what are we going to do? Well, I think it's time now that we update the bear's camp and update the bull's camp, because the bulls have been making some aggressive moves to the upside, and I just don't see here it being the 3,000 level being tested anytime soon. That's not to say that it's impossible, but I like to keep things updated. So for the bear's camp, we're going to go ahead and flip this like so. It's going to remain now here at the top of the gap window that started here on the market fall, on the market crash here in February, and we're going to have it up here to the market high, which is 3,400. That is going to be our new bear's camp. Where's our bull's camp going to be? Well, our bull's camp is going to go to the entrance of 3,200. And why is it going to be there? Well, 3,200 acted as a strong level of support right here and resistance there. And then it also acted kind of, as support and resistance through this area as well. So there's clearly a lot of price history on 3,200. So that's going to be the entrance into the bull's camp. And then we're going to go ahead and lift the bull's camp up to 3,120. And the reason why there is because there was some price action here. It acted as support, it acted as resistance, then it kind of went sideways. It acted as resistance here when we got that pop up and had that island reversal pattern, which has been canceled off in previous trading days right through around this early July time frame. So moving forward, these are going to be the two zones of resistance and zones of support. Now, we will constantly always be looking at this and monitoring and updating as time goes by, but this is the current setup. We once again have the entrance to the bear's camp at 33.30, which the price action is currently flirting with it, and then 3,200 is the entrance into the bull's camp. When we pull up the 50 period moving average and the 200 period moving average, they recently crossed here in July 8th, and we notified it the day before talking about a golden cross that was taking place. Now, it was kind of funny. A lot of people said, well, that doesn't really matter. Well, sometimes it doesn't, sometimes it does. And in this particular point in time, after the cross took place, we've been having a nice steady run up, and we have had the 50 period movage consistently sloping up, and then the 200 period moving average is starting to slope up, but it's relatively flat overall. Obviously, since March, we've just been having this nice run up with some decent sized pullbacks along the way. But as far as when you look back in the history of the February main crash that took place, where you had some big, just monster red days, no really big red days have taken place since that, other than right here on June 11th, which is this day right here. So we haven't had too much aggressive pullbacks, but we've had aggressive liquidity added into the markets from the Federal Reserve, to say the least. So what's going to continue to happen? Well, it's still in bullish context. The chart looks overextended. We have some negative divergences taking place, but the market continues to move higher and higher. Will this continue? Well, as of right now, the market's saying, yes, it's going to continue, but time will tell. Let's go into the 30-minute time frame to see how the day played out. All right, we are on the 30-minute time frame. Now, if you watched yesterday's video, I talked about a very serious pattern called the caterpillar pattern, and that was right here. These couple of days, boom, boom, boom. It looked like this with some little leggies, boom, caca, boom, like that, and had a little face with a little eyeball and a little smiley face and had little antennas like that. We were talking about the caterpillar pattern, which is a very prominent, well sought after pattern developed by Coco. And as you can see, we had the big gap up this morning. And this is something that we had mentioned. What could potentially happen? Well, we were like, hey, well, it looks like it's bullish. It might gap up, but then we might get some sort of reversal candle. And then I'd say, yeah, you might be able to short into it, but that doesn't mean necessarily that it's going to fall down. It might just fall into a new level of support. Well, I mean, sometimes we call them perfectly. Sometimes things don't happen out perfectly, but this was quite honestly just one of those perfect type of calls where we had the gap up, we had the run up, we had this inverted hammer, we had the pullback, and then it tried to retest at this level. We did not get a close above 33.30, so it's still a level of resistance. That's why we're calling it the bear's camp. So what are we going to do? Well, we're going to go ahead and put 33.30 here on the map right there. That is the bear's camp entrance. I could probably make this bear's camp just a little bit better here. There we go. So that is going to be our level of resistance for tomorrow. What's our next level of resistance? Well, we're going to have to look back in the history of the chart, and we're going to have to go back quite some ways, all the way to February. Let's see if we can find any prominent levels of resistance. As you can see on the 30-minute time frame, this looked like to be a pretty significant level of resistance right here. You saw this pull back. It bounced from that area, moved up, then kind of pulled back before the pull down completely. So this 33.40, let's call it 33.40. Let me move it down just a little bit. Maybe it might go a little bit higher. Let's call it 33.40. That level is going to be an area of resistance to keep an eye out heading in. You want to go down? Does that look good to you? Does that sound about right? Good area of resistance? Give me a kiss if it does. Okay, yeah, that's what I thought. Okay, so let me scroll back to the current area of the chart. Here we go. So going into tomorrow, we'll have 33.30 as an area of resistance. Then we have 33.40 as well. If we break above that, I mean, keep an eye out on the market high, the 3400. You might have some price action, some price history kind of get funky up just a little bit higher. But to keep an eye on tomorrow, let's keep an eye on these two areas of resistance. As far as support goes, let me map that out. So an area of support, there's a couple things that we can do here. First off, I mean, we have the entrance into the gap up. That's going to act as an area of support. We have this level and then we have this level. So it's kind of a zone. And then we also have where the window can get closed. So there's a lot of random and separate areas. But to clean up the chart a little bit, let's just go ahead and just keep two areas of support, and I'm just going to keep them as major areas. I'm going to do 3302. You can kind of call it 3300. That will be more of a major area of support going into tomorrow. And as you can see, it's right around this purple trend line. If we move it up just a little bit more, I mean, that makes sense. Let me go ahead and get rid of the caterpillar pattern, and I'll tell you why. It's because it ran into it as resistance a few times and then broke above it right here. So we could technically have it right here where the window would get closed. So keep that as an area in the back of your head. Actually, you know what? Let's just keep it there, but just know that if you were to do a long position, if the stock were to pull back down, I wouldn't have a stop loss above these candle wicks right here. I would have it just below because it might pull down through this level and then might bounce from this particular point in time. But just for technical analysis purposes, we're going to have it where the window would actually be filled. So the two areas of support going into tomorrow is 3317 and 3306. Notice that the 50 period moving average is sloping up very high. It just keeps on moving and moving. So keep an eye out for that. That typically acts as an area of support as well. So if we get continuation to the upside, I wouldn't be surprised if it lands around here tomorrow or even potentially higher depending on where the day opens up at. As far as patterns go, nothing really that I would consider. I mean, as you can see this last 30-minute candle here, I mean, it wasn't like it was this dramatic pullback and then formed a hammer, but it's worth noting that, hey, the bears stepped in. This was one big red bearish looking candle, but then the bulls really stepped up their game towards the end and then closed almost on the high for the day. So very bullish type of day. You know, had the gap up, basically went sideways, looks like it's preparing to make some sort of a move. We got to find out what takes place tomorrow. I mean, that's just what we have to do. But these levels, I think, will play a role in tomorrow's trading activity. So keep an eye on 3340, 3330, 3317, and 3306. That's all I got for you today. Coco, do you want to say bye? Bye bye.